Welcome to Trader Connect webinar. For those who are new, we do this once a month. And basically we just have a look at some charts. This is a technical analysis webinar, so I might share some fundamental ideas or stories around the stock or a Forex pair or something. But for the most part, we are only looking at technical analysis kind of things. If you would like to have more of a fundamental discussion, let me quickly rather share this screen. Where is this now? Ah, there you go. Sorry, quickly sharing the screen. So yeah, if you would like to have a bit more of a fundamental discussion around fundamentals and economics and stuff, you're more than welcome to attend some of our other webinars. So this is the one we do today, the technical one. Then we've got this JSE Power Hour one, which is on June the 23rd. July the 6th, we've got another, this is one we do monthly, the Global Market Outlook. So this is presented by Gary. And this is more of an international one. So he looks at international markets because he runs our global equity portfolio. So he kind of takes you through the portfolio, the stocks we have in it. He takes you through the international macro view and those kind of things. But yeah, this one is more of a fundamental webinar where they look at the fundamentals of stocks and economies and so on. Whereas this one, which we're doing now, this is more of a technical analysis one. Okay. Okay, but yeah, so let's go through the usual little story here while we wait for everyone else to arrive. Who is Rand Swiss? I'm sure you know Rand Swiss. We're a stockbroking firm. And these are all the awards we've won through the years. So in 2019, 2021, so 2019 and last year, we got rated the best stockbroker in South Africa. 2019, we got the top advice broker. Same thing, 2019 and last year, we got the People's Choice Award, which is always the one we care about the most because this is the one given to us by clients. And Rand Swiss clients voted Rand Swiss top, so we beat out the other brokers. 2020, we had a top online broker. And then, of course, 2020 and 2021 with the best tax-free savings account in South Africa. Okay, what do we do? Well, we do quite a lot of things. Usually, it kind of depends on what you as the client would like. And we kind of like give you the relevant account or the relevant service catered to what you are looking for. But these are just kind of some of the things we do. Online trading, I'm sure this is what most of you do. You just manage your own account. We just give you the platform. You log in, you pick your own stocks, you place your own trades and so on. Private broking, same deal. You manage the account yourself, but this time you don't want to always make the own decision. You would like to speak to someone at Rand Swiss, get some ideas from us. Maybe you're looking at the stock. You're like, hey, please have a look at the stock. What do you guys think of this stock? Or maybe you're like, look, I've got 100,000 Rand. I want to invest in the market. This is where my portfolio currently is. These are the stocks I'm currently invested in. Where would you guys recommend I invest this 100,000 Rand? Managed portfolio, you're like saying, look, I'm too busy. I've got a day job. I don't have the time to read the newspapers, follow the markets. There are hundreds of thousands of stocks out there. I can't follow all of them. I'm just going to give my money to you guys. You guys take care of it. You do the investment for you. You do the stock picks. Just please manage the account for me. Structured products. We actually have one available now from Investec. And basically, this structured product, it comes with 100% capital protection. So basically, if it's a 5-year investment, if the market is negative after 5 years, you won't lose anything. You'll get 100% of your capital back. So you only lose out to inflation in the end. But yeah, I believe it's following some international indices, and I think it's going to give you 1.2 times what the index does. So if the index does 10%, you'll get 12%. If the index does 20%, you get 24%. If the index does 40%, you'll get 48% growth. So it'll give you like 20% more than the market actually does over 5 years. Although I do believe they do cap it at 40%. So if the market has 40% or like 50%, you're just going to get 48%. But yeah, managed structured products are more like, they're more like a hedge market, or they're more for people who like low risk profile. Like for instance, if you're close to retirement, markets are very volatile, very risky. You don't necessarily want to have your retirement savings in the market. So this kind of gives you that exposure. It allows you to invest in the market, but it gives you that kind of like, you protect your capital, 100% capital protection. So you don't have to worry about the market crash. Okay, offshore transfers. You've got some money, you want to send it out of the country, or maybe you may have an offshore bank account or offshore investment account. You would like to fund it. We can help you with that. Wealth management. You need someone to guide you. Because, I mean, it's easy enough. Like, if you come to me, I'm just a stockbroker. I can help you invest in the stock market, but I'm not going to sit with you and think, well, okay, you already invested here, or your age is this is your risk profile. Maybe you shouldn't invest in the stock market. Maybe you should rather invest in this product or this product. So this is what wealth managers do. They take a look at you. They look at where you already invested. They look at your age, your risk profile, your goals, your time frame, and all those kind of things. And then they come to you with a plan saying, okay, based on your risk profile, based on your age, based on your time frame, I recommend you put some money here in the stock market, you put some money in a structured product here, you put some money into this and that, and so on. So that's what the wealth manager does. Tax-free savings account. I'm sure you all know about tax-free savings accounts. 36,000 Rand a year you can put into a tax-free savings account. I believe it's 500K over your lifetime. Any growth you get on it is tax-free. So, I mean, I'm sure if you're a long-term investor, you can appreciate just how much growth you can get on the stock market over an extended period of time, 20, 30 years. That's a lot of growth. And then when you sell out, you have to pay capital gains tax, which can be quite a lot of money. Tax-free savings accounts, don't worry about it. You don't have to pay capital gains tax. Every cent you make on the stock market, you get to keep. Okay, then some of our network partnerships and so on. So yeah, this is just some of the media entities. Brand Swiss is very active in the media, radio, TV. Gary Boyson, Viv Govender especially. You'll see them on CNBC Africa. You'll hear them on 702, Business Day TV, SABC News, E! News, and so on. And then these are just some of our providers, for instance. So if you open an offshore account with Brand Swiss, you'll open it either with Swiss Quote or Saxo, although they are now known as DMA in South Africa. If you open a local account in South Africa, you'll probably use Velocity, dependent on your need. If you're more of like a high-frequency trader or you want to do CFD trading, Velocity Trader. If you're more of a long-term investor, we'll again use DMA or Momentum. With these two, it kind of depends what you want. If you don't want any of the bells and whistles, you don't want charting, you just want an account that will give you access to the stock market and hold your shares for you, we'll go with Momentum. If you do want to have some charting available and a more high-tech platform, we'll use DMA. So it kind of, like I said at the beginning, we can do a lot of things. It's all dependent on what would you like to do. What are your needs? Based on your needs, we'll say, okay, maybe a Velocity account's good, or a Swiss Quote account's better for you, or a Momentum account's better for you. It depends entirely on what you want to do. Investec, we can open a Investec bank account for you. We use Investec when we do these offshore transfers. We open an Investec account for you. It's called the CCM account, corporate cash management account. It's basically just a savings account in your name at Investec. You pay your rands into the account. The account currently gives about 5.05% interest, which is not bad. So it gives you like a nice interest. You're more than welcome to just keep your rands there, earn the 5% interest. Or, like I said, you want to do an offshore transfer, we'll do this via Investec. We'll do it via that bank account. Okay, and then finally, as I said before, we're going to look at all these charts. We're going to look at some trades. Please just take note that this is by no means a recommendation. When I analyze the stocks and I say, okay, this looks like a buy or this looks like a sell, I'm by no means telling you like, please go out and buy or go sell. It's but only my ideas. They're only my opinions. So always please use trading your own discretion. Do your own analysis. You're more than welcome to take my opinion into account, but yes, it is by no means a recommendation. Okay, so let's start analyzing your trades. Okay, so Velocity Trader. Okay, this is the platform. Like I said, if you're more of a high frequency trader, you want to do CFD trading via a rand-based account, we will most likely use this platform, Velocity Trader. It gives access to JSE equities, but it also does JSE CFDs. As you can see, it gives you Forex. What else? It gives you commodities, oil, gold, so on. It gives you indices like the US 500 or US Tech, which is the S&P 500 or the NASDAQ 100. So it's a multi-asset platform, and it's all based out of a rand-based account. So you don't actually have to send money offshore to trade those offshore instruments. It's got offshore CFDs as well. So New York Stock Exchange and NASDAQ listed CFDs. If you want to trade the CFD on Tesla or Amazon or Microsoft or whatever, you'll find it on this platform as well. Okay, but yeah, we always start with a bit of Forex. For you Forex traders out there, I personally, the other day, well, 2 days ago, I opened a little short position on USDZAR. I opened my position on 16.15. As you can see, it's going okay for me at the moment. I mean, it's in the money. But yeah, we'll see what happens. Because personally, as you can see, like usually when it gets up to 16.20, up right here. There you go. Like that 16.20 rand level. That's a bit of a area of resistance. So it gets up there, it falls. It gets up there, it falls. So whenever it gets up to 16.20, the rand seems to be a bit undervalued and people start to sell. So what exactly happened here though? Why did the rand shoot up? Basically, inflation numbers in the US came out and it was higher than expected. And because inflation numbers were higher than expected, people think, oh, okay, the Federal Reserve, which is basically like the American Reserve Bank, they're going to hike interest rates. Basically, that means two things. One, you always have to remember when you do currency trades, interest rates matter. People move their money where they can earn the most interest. Okay. So rising interest rates for a currency is good. Usually when a country raises interest rates, you want to go long on that currency, but it depends what the currency pair is. Because remember, when you do a Forex trade, we look here, USDZAR, there are two currencies involved here. So you have to take into account both the interest rate in both countries. And usually you want to go long on the currency that has the higher interest rate. It's known as the carry trade. But okay, you might be asking me then, okay, Chris, then why is the rand weakening? Because I mean, our interest rates are definitely much higher than they are in the US. And that's because two reasons. One, when interest rates go up, stock markets go up. Well, risky assets, let's rather say that. Risky assets don't do well. So risky assets are like stock markets. So you would have seen in the same time when this happened, when the rand weakened, you can pull up the chart. We can actually, let me pull up the chart quick. I'll come back to the USDZAR, but I'll just pull this one up. As you can see, stock market went down. Rising interest rates are usually bad for stock markets. Why? Because a lot of companies fund growth through debt. And when interest rates go up, they now have to spend more money funding that debt. So they make less money, they make less profits because more of their revenue has to go towards paying off interest payments, which are now higher. Okay? So that's why markets fall. But it's not just markets. So when we're talking risk off, we're talking equities and we're talking emerging market currencies. And South Africa, of course, we're an emerging market. Our currency is considered risky. So the rand does well in risk on environments. But when interest rates go up, that's considered risk off. That's bad for risky assets. And that is why sorry, I just want to check here. Okay, I hope you're all seeing this fine. Just give me a notification. But yeah, so basically that is why the rand, even though we have a higher interest rate, and weakened against the dollar. So the thing to watch today is the Fed. They're having a meeting. I mean, they previously said they're going to hike interest rates by 50 basis points every time they hike it. So that's basically 0.5%. But they said the last time they're not going to hike it by more than, they're not going to hike interest rates by 0.75% at a time. So that's the thing to keep your eye on. If the Fed comes out today and they say, yes, we're going to hike, we're going to do another 50 basis point hike, that will be in line with expectations, and you will initially will probably see the rand weaken a bit, but then you will start to see the rand strengthen again. If they, however, come out and say, in fact, we've changed our mind, we're going to hike interest rates by 75 basis points, in other words, 0.75% interest, that is not going to be good for the rand. And that's not going to be good for my short trade. You will then see the rand just continue to weaken. It will most probably break above 1620 and just keep going up. So yeah, that's the thing to watch today. What is the Fed telling us today? Are they going to hike with 50 basis points or 75 basis points? 50 basis points, good. It is within expectations. There might be some weakness initially as interest, because like I said, when interest rates go up, it's good for a currency, but it will come back down again because that 50 basis point raise will have already been priced into the market, because the Fed already, last month or 2 months ago, they already told the market, look, we're going to do interest rate hikes. We're going to do 50 basis point interest rate hike over the next year. So the market already expected, market has already priced it into the currency. If they come out with a 75 basis point hike, that's a different story. The market did not price that into the currency because the market did not expect that. So now the market needs to readjust. And then you will see the dollar strengthen, not just against the rand. You will most probably see it strengthen against all currencies, because that's the other thing. The dollar is seen as a safe haven currency. So that is also why it strengthens when markets are in risk-off mode. The people go into the dollar because the dollar is seen as safe, seen as a safe haven currency. So that's why you'll also see the dollar even strengthen against other developed market currencies, not just emerging market currencies. If you look at the dollar versus the pound, the euro, the yen, you will see all those currencies have weakened against the dollar, just because the dollar is seen as this strong safe haven currency. Okay, so that's the USDZAR. Like I said, but okay, that was fundamental stuff. Like I said, sometimes I'll talk about fundamental stuff. Let's do some technical analysis. I already, right there, I put that little resistance line for you. As you can see, 1620 is resistance. But I need something special to push above that, like for today, if they come out and say, look, we are hiking by 70 basis points, that might be the moment, the thing that pushes the currency higher. Okay, let's see what else. MACD, what's the MACD telling us? Well, there you go. If you are a regular participant of this webinar, you will immediately notice what's going on here. But if you're new, what are we seeing here? We are seeing what is known as a bearish divergence. So what does that mean? Right now, the rand is roughly about the same level where it was. When was it? Beginning of May. Okay. But if we look at this indicator, the MACD, what do we see? The same high is not being created. I mean, not even close. So that is known as a bearish divergence. What does a bearish divergence tell us? Well, a bearish divergence basically tells us you might see a change in trend. So here is a good example, right here. in March to April, halfway through April. The Rand, while the USDZAR make the same lows. But at the same time, what would we see? The MACD was actually starting to trend higher. Okay. So what does that mean? So it was telling us that was a bullish divergence, bullish. Because remember, when you are bullish, market goes up. When you're bearish, market goes down. Or rather, say when markets are bullish, not when you are bullish or bearish. When you're bullish, you think markets will go up. When you're bearish, you think markets will go down. So this is a bullish divergence. It was telling us, hey, take a look here. We might, this bearish trend that we've been seeing here, that might be changing. It might be going up. And look, that's exactly what happened. So this is kind of like a leading indicator, these divergences, but I'll say the same thing I always said. These divergences, although very good, as I just showed, they can be very good at predicting and letting you know, hey, keep an eye here. They are not 100% foolproof. So yeah, don't always think, oh, this divergence, 100%, I need to go long. Just be careful. Like they are a good indicator, but they're not always 100%. I'm sure we're going to look at a lot of stocks and charts through this webinar. And I'm sure eventually I'll find you a good little divergence where there was a divergence and then it didn't actually happen. It just kept going higher or kept going lower. But yeah, here's another good one. Right here. Was making the same highs. And yet, what were we seeing on the MACD? Was going lower and lower and lower. Bearish divergence. And look what happened eventually. Boom. The Rand strengthened, the dollar weakened. So these divergences can be very good, but again, not entirely foolproof. They're not 100% correct all of the time. So just keep that in mind. Yes, nevertheless, coming back to this one here, we are currently seeing a bearish divergence. So if you are looking to go short, like I did, I went short at 1650. 1615, sorry, not 1650, 1615. That's where I went short. It's right at resistance, right where it tends to weaken. We've got a nice little bearish divergence. So the Rand looks like a good short. Now you can either be brave, like I was here, and just open your position now. But of course, the risk is, now for me, the risk is that the Fed will come out and say, we've changed our mind, inflation is too high, we need to hike interest rates much faster. We will be hiking interest rates with 75 basis points, and then my trade will go against me. I will have to close it because, yeah, the trade's going to go against me. But I can be right. Sorry, let me just put this in silence. But the Fed did say in the last meeting, we are not considering 75 basis point hikes. And I doubt they will do it again because the Fed likes to give the market a bit warning, saying, look, we're considering it, we might do it. The Fed doesn't tend to just go, the Fed doesn't tend to say, we will only be doing 50 basis point hikes, and then in the next meeting come out and do a 75 basis point hike. The Fed kind of tries to warn the market. It tries to let the market know, look, this is what we're planning on doing. This is what we're thinking. They don't just impulsively do things. So if the Fed does, in fact, today come out and say, we're doing a 50 basis point hike, which will be in line with expectations, the Rand should strengthen. And on top of that, markets might just become strengthened again. Okay. But yeah, that's the USDZAR. Any questions on that one? Okay, if not, I'll move on to Brent, because we're all feeling the pinch on this one. Okay, so what are we seeing here? At the moment, it's not looking the best, because if you look here at Brent, it had resistance at $120 a barrel. I mean, it broke there. That was an initial spike. I can't remember exactly why it spiked there. Oh, it was I believe, yeah, it was the war in Ukraine. But then it weakened and then came up to 120, and then 115 actually was another area of resistance there. So it kept on 115, drop, 115, drop. So it's been trading this range between 115 and $100 a barrel. Hit, fall, hit, fall, hit, fall, and then it broke above 115, and then it broke above 120, and now it seems like 120 is no longer resistant. It seems like it might be have become support. It happens. The next few days are very important to see, okay, exactly what's going to happen here, because this might just be what is known as a false breakout. I mean, we've seen this happen. Like, for this year, it broke above 15, but it just came right back down into this range. So it might be what's happening here. But yeah, it's kind of a wait and see. We have to see, well, okay, what's going to happen over the next 2 to 3 days. So maybe by Monday, if you're looking to open a trade on Brent and deciding, oh, should I go long, should I go short? I'll probably leave it for the weekend, see what happens, see where it's at on Monday. And then Monday, you can make another call. But yeah, at the moment, it looks like it has broken through, and like 120 can be acting as support. Like, yeah, MACD. So yeah, I guess I should probably talk about the MACD. So MACD, basically, its initial purpose is not for these divergences. The initial purpose of the MACD is it's a trend indicator. So it's trying to tell you, is the stock or the commodity or the Forex pair, whatever you're trading, is it in a bullish trend or a bearish trend? Okay. And at the moment, you can see it's telling us it's in a bullish trend because it's trending up, 1, and 2, it's above 0. So if it's above 0, it's bullish, below 0, bearish. So it's above 0 and it's trending up. So that's bullish. Now, yes, fair enough. It has broken below its signal line, which means it might be the beginning of a downtrend. We don't know yet. It's still early days. It's difficult to say. That's why I probably say, if you want to open a trend on Brent, what do you want to do? Probably wait until Monday to see what's going on here. You can put on another indicator. Okay, so this one, what's this one telling us? Okay, so this one, at least, the Ichimoku is being very bullish at the moment. So one, this is the cloud. This is the leading indicator. If it's green, it's bullish. Red is bearish. So at the moment, it's green, it's bullish. So Ichimoku is predicting higher oil prices. You've got your short-term and medium-term moving average. Short-term above, medium-term, that's bullish. Lagging indicator, just whatever the price is now, pushed back 26 periods. So in this instance, I'm looking at a daily chart, so 26 days. If I was looking at an hourly chart, it would have been 26 hours. That is above where price was 26 days ago. That's bullish. So Ichimoku, at the very least, is very bullish on oil at the moment. The Ichimoku is predicting higher oil prices. Okay, what is gold doing? Okay, looks like it's struggling to load. Let's try another one. Since we looked at oil, let's have a look at Sasol as well. Because I'm sure you know Sasol oil company, yes, they do some other stuff as well. They're in chemicals and so on. But their share price tend to be very highly correlated to the price of oil. And as you can see, that's the spike there that we saw, the Ukraine war. When you remember, if we looked at Brent, we saw that spike in February with the Ukraine breakout of the Ukrainian war. Same thing happened with Sasol's share price. It spiked. And then just like oil, it kind of just trended, and then oil shot up, and look, Sasol shot up with it. Why is Sasol being down? Well, I guess it's just general risk off. At the end of the day, Sasol is still a share. And like I told you earlier, in risk off moods, in risk off environments, equity, stocks don't tend to do it well. Stock markets tend to crash. And at the end of the day, Sasol, it is an oil company, but it is still a stock. So it crashed a little bit. And I think what people also need to understand is, with these high inflation numbers, there's a fear that the Fed will induce a recession to try and fight these extremely high inflation numbers. Like, I mean, the latest inflation number that came out was, I think it was well above 8%. It was much higher than people expected. And I know for South Africans, we might think, well, 8% isn't really that bad. Because, I mean, we're used to inflation between 4 and 6%. So yes, 8% is slightly higher than that, but for us, it's not such a big number. But what you guys need to understand is, in developed markets, 8% inflation is very high. Before COVID came, I mean, developed markets were actually struggling to get inflation. They were actually dealing with deflation. They were, and the countries that did get inflation, they were getting inflation of like maybe 1%, 1.5%. A lot of times 0.5%. So to now get 8%, that is a very big number for them. So a lot of economists, a lot of people, they are scared that the Fed will say, look, the only way to fight this inflation, the only way to fight these high inflation numbers is to essentially induce a recession. We're just going to have to hike interest rates super high. Because again, you guys, they're like, in America, they're not used to these high inflation numbers. I think before COVID, I mean, I could be wrong here, but their interest rates were around 2.5%, maybe. So they're not used to these high interest rates now. Now suddenly they're scared, like the Fed will have to hike interest rate to 5, 6, 7% to fight inflation. And these, of course, are very high numbers for them. It's not high for us. We're used to high inflation, interest rates. But for them, these are very high numbers. And these are the kind of numbers that will induce a recession in America. And a recession in America pretty much means a recession in the rest of the world. It's like they say, when America sneezes, the rest of the world catches cold. That's basically how it goes. I mean, America is the world's biggest economy. Whatever happens to them happens to the rest of the world. There's just no way around it. So if they go into a recession, the global economy essentially will go into a recession. So yeah, but okay. So that's kind of why oil, I mean, yes, there's a bit of a shortage, so that's keeping oil high. But the world going into a recession is not good for oil. Because when the world goes into a recession, economies go down, manufacturing go down, people lose jobs. So the demand for oil nosedives. So it's not within the interest of oil for high interest rates. They want economies to just keep pumping. They want economies to keep going. That's what people want. So that's why you probably also saw a drop in the share price of Sasol, even though oil necessarily didn't go down by that much. But it's because people are like, the Fed's going to hike interest rates too much. There's going to be a recession. Oil prices are going to fall. And so basically, it's just like I said earlier, this is the market pricing in what's going on here. Okay. Already, what do we see here? Sasol had a good resistance at 400 Rand a share. Broke out, but now it seems to be, because if we zoom in, we can zoom in a little bit. Sasol has now dropped back below 400 Rand. So this might have been what I spoke of earlier, a false breakout. And now it's back below 400 Rand. Will 400 act as resistance? Or is this what is known last kiss goodbye? This is also what people call it, last kiss goodbye. Comes back, it retests this area, and then it just shoots back up again. At the moment, it's below, but I mean, these resistance lines, they're not written in stone. They're more like at area of resistance. So don't think, oh, 400, that's resistance. I mean, it's just the area around 400 Rand that acts as resistance. So just because it's below 400 Rand doesn't necessarily mean it's dropped back below. It can very easily go back up. This could very easily be that last kiss goodbye. Again, like with oil, what do? I mean, if it was me, I would probably say, wait and see. We'll see what happens. Wait until Monday, wait for the weekend. Because tomorrow, of course, is also a public holiday in South Africa. So if oil suddenly drops tomorrow in international markets, you won't be able to do anything because this is traded on the JSE. The JSE is not going to be able, it's not going to be open on a public holiday. Friday, you get back, suddenly Sasol is down here, and then you're like, oh. So yeah, I'd probably not open up any positions on Sasol at the moment. At the very least, wait until Friday, but probably wait for the weekend to pass. Monday, reassess, see what's going on. Okay, any questions on Sasol? No. Okay, let's see if we can load gold yet. Okay, there we go. There's gold. Okay, so I'm sure a lot of you might be looking at this chart and wondering why. Why is gold doing so well? Because there's this perception in the market that gold is a very good inflation hedge. So if inflation is high, gold should be doing really well because people are buying gold to protect their assets or to protect against inflation. But I think what a lot of people don't understand is that the USD and gold, they have this inverse relationship. So if the dollar does well, gold doesn't do so well. When the dollar does poorly, gold do a little bit better. And that's basically because, I mean, usually when the dollar does well, I know I'm repeating myself here a lot, but usually when the dollar does well, it's because of rising interest rates. That's why the dollar does well. People are earning more interest on their dollars. And if you buy gold, you don't get interest on your gold. You don't earn dividends on your gold. The only thing you get from gold is capital growth. That's it. You're not going to get income in interest. You're not going to get income in dividends, like when you buy, for instance, a gold miner. A gold miner, if the gold miner share price should also go up with the share price of gold. I mean, there's other factors in play here, like currency conversions and so on. But gold miners tend to go up when gold goes up. But on top of that, gold miners pay dividends. So that is why a lot of people prefer to rather buy the share of a gold mining company rather than gold, because gold not going to give you income, not going to give you dividends, not going to give you interest. You're only getting capital growth. But yeah, so that is why gold has not been performing so well, even though interest rates have been going up. Inflation has been high. It's because of rising interest rates on USD. So people are like, look, I'd rather just buy dollars and earn interest and get some income from that instead of buying gold. So yeah, there's kind of like this inverse relationship between gold and the dollar. Dollar has been strengthening, and thus gold has been weakening. But okay, let's look what's going on with gold. What do we see? So there kind of resistance and support. So at 1,820, $1,820 an ounce. No, sorry, is that right? I should put it a little bit higher. Like right there, sorry. 1,830. Okay, $1,800.30 per ounce. That was resistance for a long time, broke through it, then it found support there at, sorry, I'm just trying to find the levels. Well, 1,920, broke below it, and now it seems to be finding support at 1,800. So I guess let's remove this one, because this was back then. This is not really for now. So I'll remove this one just so it's not so cluttered. Okay, so 1,000. $1,100 an ounce seems to be where gold is finding some good support. Luckily, it has not broken out. So again, but this is very much in line with my USDZAR trade as well, isn't it? Like, if you guys remember, I said at 1620, that's where resistance was on USDZAR. That's where I opened my short. Likewise, this is just kind of the other way around. 1,800 seems to be where support. So if you're looking to buy gold or do a short-term trade on gold, now might not be the worst level. Again, this is dependent on what the Fed comes out. If the Fed comes out saying, no, we're going to do 75 basis point hikes, you're going to see gold crash. Gold is, I can guarantee you, gold is going to drop below 1,800. It's going to drop to 1,780, 1,760. But if the Fed comes out and say, we're going to stick with our 50 basis point hikes, then this will already have been priced by the market into the price of gold. Again, like with the rand, you're going to say, oh, we're going to have higher interest rates. Initially, there might be a bit of weakness, but then gold should continue to strengthen. So this might not be the worst level to open a long trade on gold. Or, like I said, you can wait for the Fed. It depends how brave you are. If you say, like, look, I don't think the Fed's going to do 75 basis point hikes. They're going to stick to the 50-point base hike schedule that they told us they're going to do 1 or 2 months ago. By all means, now would be a good time. But if you're like, I don't know if I want to risk it, I'm first going to wait and see what the Fed does, what the Fed says. If the Fed comes out and say, we're sticking to 50 basis points, fine, you might miss a bit of growth here, but you'll be safe. It's a less risky trade to wait. But if you're just saying, you know what, I'm not going to, I want this price that I can get right now. I want to open my long position at 120, whatever. I want to open it at 140 or 150. That I'm missing out a $20, $30 move there. I'm going to go in now. Then you can go ahead. Again, your call. I'm not making any recommendations here. I'm just giving you my opinion. But okay, that's gold. Let's look at a South African miner, a gold miner. So let's look, for instance, at Gold Fields. What are they doing? You see now, if you look at a South African gold miner, it kind of complicates things because you cannot just look at the share price, at the price of gold. Because I mean, I know a lot of people, you think, okay, if gold goes up, the gold miner share price goes up, like I said earlier. But remember, I said there's other things to factor in as well. And in the case of a South African gold miner, you need to keep into account the USDZAR exchange rate. Because at the end of the day, these gold miners, they have to sell the gold in dollars. And if the rand is weak, they of course get more rands for their dollars. If the rand strengthens, well, then they're getting fewer rands for their dollars. So it kind of, so even though gold goes up, rand strengthened, and it kind of eats away a little bit of the profit. So this one is a bit more complicated to call. But from a technical analysis point of view, let's zoom out a little bit. Okay, what are we seeing? Right here, 150, Gold Fields. So that seems to be quite the level. There was a bit of a false breakout again. You remember I spoke about the false breakout earlier. But at the same time, will I call this false breakout? No, because remember I told you, I want like these support and resistance, they're not really fixed levels. They're areas of support and resistance. So like you can see here, there's this area where it found support. You don't get to 150 and immediately 150, yeah, I'm done, I'm going back up. I mean, it's an area. But again, okay, so at the moment, this looks like it might be a good level to buy. Let's see what else we can see. Let's put the RSI, which we haven't had a look at today yet. Okay, so what's the RSI telling us? For those of you who are not familiar with the RSI, the relative strength index. And basically, any level below 50 and 30 is considered bearish. It's considered weak. If it drops below 30, then it's considered oversold. That's bullish again. It's likewise, any level between 50 and 70, bullish. That's considered good. There's strength in the price, there's strength in the stock. This indicator saying buy it, go up. But when it goes above 70, what happens? Then it's considered overbought. That's bearish again, and that's exactly what you can see happened there. It went overbought, and then boom, it started going down. But much like those divergences, bullish, bearish divergences, these things are by no means 100% correct. Like for instance here, look, it went overbought. Yeah, okay, fine. It went down a little bit, but at the end of the day, it just continued to go up. So these things aren't always 100% correct. They're just something to take into account, something to take into consideration, along with your own analysis, using other indicators and listening to other people. Okay. So now getting back to this. So yes, this looks like a good level to buy, but if you look at the RSI, the relative strength index, what are we seeing? It's below 50 and 30, which is of course bearish. So yeah, that's now telling me, oh, maybe it's not such a good time to buy. Let's try something else. Shimoku, I mean, I expected this. I'm not surprised by this. I mean, it's been falling hard. And basically, how these indicators work, yeah, it's kind of like, so if you check this line is the midpoint between these two. And then this line is actually your long term. So if this is your short term moving average, this is your medium term moving average, this is your long term moving average. And then this line here is the midpoint between your medium and short term moving averages. So whenever this line is above your long term moving average, you'll get a green cloud. When it's below your long term moving average, you get a red cloud. So I'm not really surprised to see a red cloud, because naturally these two have been coming down, and with this one being the midpoint, it's going to be coming down along with them. And because this is your long-term moving average, it reacts much more slowly. So this one is going to react more quickly. Not surprised to see a red cloud there. Nevertheless, it's predicting more bearishness for Goldfields. The lagging indicator well below where price was 26 days ago, bearish again. Short-term below, medium-term, bearish again. So yeah, what do you do in this situation? Okay, so we know, okay, well, this seems like a good level. This was like good support resistance before, but we're getting two indicators now which are telling us bearishness. So what do? Well, wait and see for me. If it drops well below this, then I'll say, okay, well, these indicators are clearly correct. Let's go short. If it bounces back, then you say, okay, the support seems to be holding. I'm going to open a long position. But yeah, at the moment, Goldfields, it's difficult to call, like, okay, I think this is going to happen or that's going to happen. Okay, now I'm quickly just going to look at some offshore stocks as well. Okay, so this is the DMA platform, or what I mentioned before, Saxo. If you open an offshore account with Rand Swiss, this is where most of our clients go. Like I said before, we use Swiss Quote and DMA, but Swiss Quote we use mainly for people who go into our managed portfolios. People who want an online trading platform, people who want to manage their own platform, you will most probably get this platform here, DMA. Okay, it is again same as Velocity. It's a multi-asset platform, but it's got way more. It's got thousands upon thousands of instruments. It's got CFDs, futures, options, equities. It gives you access to US markets, UK, Europe, Australia, Hong Kong. Thousands of instruments to trade on. Okay, so this, I think this was one we looked at before. Love. This is basically Southwest Airlines. We can, while we're here, just will have a look. Naturally, as you can see, it's been dropping as it would. I mean, at the end of the day, like I said, rising interest rates, bad for stocks. at the end of the day, this is the stock. So it fell along with the rest of the market. But I think this one is also especially affected because if you remember, I said people are scared the Fed will induce a recession. And a recession is, of course, not good for travel stocks, for tourist stocks, travel stocks. When it's a recession, people have less money, people lose jobs. They don't fly somewhere, they don't buy air tickets and go on holiday or go on business trips and so on. So naturally, a recession is not the best for an airline stock. What we can see, though, is I don't know if I would necessarily call this an area of support, but what we can see, though, is the last time the share price got here, it bounced back up again. So if you want to risk it, if you want to chance it, you can easily say, look, last time Southwest Airlines got to $37.30 a share, it went all the way back up to $50 a share. Maybe you can do that again. I mean, let's put on an indicator. There's the MACD. So, you see, there was another divergence. So it made a new low, but made a much higher low on the MACD, and it wasn't wrong. At the end of the day, that was a nice little trade, a $13 trade. That's not a bad move. But now, do we see the same thing? Nope, no divergence. I am not seeing a bullish divergence this time. It's at the same level with the stock. It's at the same level with the indicator. So, yeah, that's. I would have hoped before I would open a trade, say go long, I would have hoped to at least see a divergence. I'm not seeing that divergence, so that's quite something. Like I said, I won't call this support just because it happened once before. If it jumps up again, then I would say, okay, this clearly is acting like support, but it's too early to say now. Preemptively, though, it looked like it might be support. Let's try. Okay, that at least is a bit bullish. If you're looking, it has just gone into oversold territory. So yeah, this is not looking, so that at least is a bit bullish. So maybe at the end of the day, this might not be a bad time to buy. But yeah, this is just difficult call to make because there's just too many mixed signals I'm getting there. Okay, let's look at another one. Tesla is always a favorite. So yeah, Tesla has not been doing pretty well. Because one thing you need to, I haven't mentioned this in today's webinar yet, but in rising inflation environment, in an environment where interest rates go up, growth stocks especially don't do well. Because with growth stocks, you are investing in a stock for its future income. It's saying, look, we're not making a lot of money now, but we're a growth company. We're going to make a lot of money in the future. Now, the problem, of course, is when inflation is high, suddenly that future income, the value of that future income comes down. Because I mean, we all know what inflation is. Essentially, inflation is my money today is worth more than my money is going to be tomorrow. 1 rand today is going to be worth maybe 95 cents tomorrow. So that is why inflation is very bad for growth stocks. Growth stocks are like Tesla, Amazon, all these tech stocks basically. Google, Microsoft, Nvidia, all those kind of companies are seen as growth stocks. You're seen as companies that's going to have good future income, and the market is pricing in that future income now. But now that inflation is high, the market needs to readjust. We need to reprice the share price. So suddenly that future income is not worth as much as we thought it was yesterday. So yeah, growth stocks especially have been doing poorly. If you compare the S&P 500 with the NASDAQ 100, the NASDAQ 100 is all these tech stocks, while the S&P 500 is still a lot of tech stocks, but it's also got some value companies in there. So you'll see that the NASDAQ has dropped much more this year than the S&P 500 does. That's because the NASDAQ is this tech-heavy, growth-heavy index, and inflation has really been killing it. But okay, nevertheless, Let's have a look. So Tesla, $600 a share. That seems to be the area. Very close to it, $60 away. So it might come down a little bit, but like I said again, support, resistance, never exact number. It's an area. And right now, Tesla is near that area, like you can see there. It was an area of support. It was an area of support. So right now, it is near that area of support. So if you like Tesla, if you want to invest in Tesla, now might not be the worst time to do it. Again, not a recommendation, just my opinion based on what I'm seeing here on this chart. But Tesla is looking like it's at a good level. Let's put on. Okay, what's the Ichimoku telling us? Okay, bearish. The gap, at least between the medium and short-term moving averages, have closed. That's somewhat bullish. Lagging indicator, not quite as far below price where it used to be. That's somewhat bullish. What you need to take note, though, is when it starts to move in between price, that means there is no trend. There's no bullish trend, there's no bearish trend. It's just trading sideways. But at the moment, it is below, so that is still bearish, but it's not as far below as it used to be. Yeah, the Ichimoku, nevertheless, is somewhat bearish. If we put on the MACD, what's that telling us? Okay, so there, bullish divergence. That at least looks somewhat promising. There's the bullish divergence on the MACD. Remember my warning from earlier, though, they're not 100, they tend to be good. They can be good, these divergences, but they're never 100%. So yeah, just keep in mind. Okay, but nevertheless, there you go. There is the bullish divergence. So it's at a good level. You got a bullish divergence. That's not a bad sign if you're looking to buy Tesla. Here again, there was another beautiful example. Who's that now? Arrow. With Tesla trading same level, but what do we see on the MACD? Bearish divergence. And then that's exactly what happened. I mean, first there were two. There were this one here. So let me put more arrows for you. So there was this shorter term one. I'll make this one a different color. Let's make it black. Black. Okay, so there were two bearish divergences here. The first one, shorter one, same level. Clearly bearish divergence, and look what happened. Boom, it crashed. Came back up, still a more longer term bearish divergence. Boom, it crashed. So again, these divergences can be very, very good indicators. Like, look, hey, the trend can be changing. You might, if you're long, you might want to go short. If you're short, you might go long, whatever the divergence is. They can be very good, as this has shown again. But yeah, just always keep in mind, take it with a pinch of salt. It's not always 100%. Okay. But yeah, that is the webinar for today. If you know someone who might have missed it, don't worry. It has been recorded. We will upload it to YouTube. So, or yourself, if you might want to watch it again, it will be, as soon as it's up to YouTube, email will be sent to you, and they will let you know it's up on YouTube. You can go watch it. But yeah, thank you for attending today's webinar, and I look forward to seeing you guys again next month. Have a good day.